Good morning, good afternoon, good evening, depending on where you are joining from. I am Gauri Das and I am your host for this chat show, Factoring One Stop Solution for Your Global Aspirations. As usual, we have two eminent guests today who will be talking about trade finance, factoring, working capital solutions, and much more. But before that, let me talk quickly about India Factoring. India Factoring is financial services provider and we offer working capital solutions through factoring product aimed at converting your receivables into cash. The company is subsidiary of a European bank, Fimbank PLC Malta, and is registered with RBI as an NBFC factor. India Factoring is also 83 category authorized dealer, and through our global network, we offer one-stop solutions around receivable finance. We have been recently recognized as best factoring services provider globally. Now let me talk quickly about our first speaker, Mr. Kishore Pradhan. Kishore is CEO of Global Trade Consultancy Services. He carries 25 years of experience in banking and financial services. Kishore also sits on multiple boards as an independent director, and he is member of Banking Commission ICC Paris, Executive Committee ICC India, Working Group of Banking Finance, Digitalization and FinTech, FICCI CM SMEs Expert Panel, and also he has been ex-co-chairman of ESOCAM National Council for Factoring. Welcome, Kishore.
Thank you, Gauri. Good to see you all. I hope
Thanks.
everyone enjoyed the chat show.
Thank you for joining us today. And it's time to invite our next speaker, Mr. Ravi Valecha. Ravi is an experienced banking and financial services professional with expertise in factoring and supply chain finance. And he's currently CEO of India Factoring. Welcome, Ravi.
Yeah, hi. I'm glad to be here again. Thank you so much.
Thanks for joining.
Thank you, sure.
Hi, Ravi. Good to see you guys.
So, Kishore, all of us, and Ravi, all of us are joining from Mumbai, and we had first rain. Kishore also mentioned it, and I also had it. So, we have some respite from summers now, and there will be a cool breeze now. This side, it has happened. But what is not happening is any breather from inflation. And that's how RBI had to take a stance yesterday. Within 5 weeks, they have gone to 90 basis point rate hikes. And that has put all businesses in spot. For businesses, there are multiple challenges today. On people's front, they are struggling with great resignation, and that is increasing their cost. On supply chain front, there are lot many challenges. Shipping cost has increased, raw material is not available, inflation is eating into the profits, and on top of that, there is this hike also, which will impact the availability of credit, and cost of credit will go way higher. So, what, according to you, this rate hike and the current scenario is going to play out? How is it going to play out for businesses, especially exporters who are already struggling with so many challenges? I'll start with you, Kishore.
Okay, great. You have explained it in a really very good fashion. There are challenges, and there are going to be more challenges in the near future. And industry experts are actually looking at additional hike, and it will go to the pre-COVID area maybe in next 6 months. Having said that, yes, I mean that are the economic steps any governor of the central bank of the country will take. They are being compelled to take that step. But if you really look at a different positive side, I was going through one of the report which has been prepared by Standard Chartered and PwC, and they have actually projected the growth of something like 7.6% for exports from India. So by 2030, we are expected to touch something like $564 billion. And in the overall global scenario, India seems to be actually having a substantial growth in next 8 to 10 years. I mean, that is what PwC report states. I mean, if you are looking at a different industries perspective, chemicals, pharmaceuticals are the industry where there will be, key growth. Especially for Asia Pacific area, the another sector can be US, which will actually have, the US growth has been projected at something like 17%. Now that is something really, really fabulous. So yes, there will be little challenges in a short term, but in a long term, I can see the future is absolutely bright. Especially if you are looking at all the economic policies of Make in India, which are actually helping us a lot. Earlier issues, if you really look at Ukraine issues and all those things, indirectly it will certainly benefit Indian economy and Indian exporters who can actually in a better position to have a better say in the international market. So I'm absolutely positive. Yes, there will be a hike. There is a hike in last 5 weeks, 90 bips. I'm expecting some more hike in another 6 months time. But yes, these are the small challenges. But I'm absolutely positive about the growth in the industry.
Thank you, Kishore, for that positive outlook. Yes, that's how India has been extremely resilient, and that's how we have seen the growth, the tremendous growth that we have seen in exports, merchandise exports. Ravi, what is your view on this?
No, so rightly, I mean, as Kishore pointed out, obviously it's a cycle. You can't have a reducing cycle all the time. So it's a cycle which goes up and which comes down. At each time. We saw in the pandemic time, the demand was more of a concern. At this time, unlike the issue which is raising the interest due to inflationary trends, it's not related to demand. So demand is adequately there. What we saw in pandemic, the demand wasn't there. That's why the rates were brought down to create that demand. Today's scenario, the demand is still there, but the supply constraints are actually causing an issue, more so from the perspective of oil and commodities, which are seeing as the inflationary trends. Even today, the demand from end consumer is there. Hopefully, what economists are sharing across the world, and more so from India perspective, is that with the monsoon expected to be normal, hopefully, things should again drive it up in a positive terrain. And as regards from an exporter specifically, there were various reforms and incentives earlier created by the government of India. The reforms, including PLI schemes and various PLI schemes, provided for various investments, not just in textiles, possibly in semiconductors and various other sectors. It was provided, and there was a huge interest. In fact, so much so that we saw some large investors pumping in money and putting interest, showing interest, large conglomerates putting up plants, new investments coming in. So there, from a corporate's point of view, also the investment cycle is not yet impacted in the first quarter of the current financial year. Of course, the trends which we see now, the inflationary trends, will play it out in the quarter two and possibly quarter three. That's why the estimates on the GDP front have been pared down to from 8% to 7.2% as per the government numbers, as per the RBI numbers. But I see that as a short-term problem, and that's the recurring theme I'm hearing, not just in India, across the world also, that 2022 could be a hard ball game. But definitely they see softening things from 2023 onwards once the geopolitical situation also comes down. So that's, in a sense, a short-term pain, but for a long-term benefits continues. Thanks.
Thanks, Ravi. Yeah, rightly said that investment demand and demand has not been impacted, and that's how there was a huge growth last month. We saw a growth of for 15.46%. Goods exports reached $37 billion from $35 billion. So there was a 15.46% growth despite all the challenges. And this was goods export globally. So local demand, global demand, all are in place. What do you think, Kishore, has really worked well for us that we have reached this number? And we also breached a lot of records, like last year, the last financial year was closed at $418 billion in terms of merchandise exports. So what, according to you, is really working for India?
No, I think key economic policies. One is the development of the infrastructure. Second important thing is the thrust of the government on the Make in India, where we have started manufacturing multiple things. If you see the mobile production also, which was not there 10 years back, now we are one of the largest producer in the global market. Apple is coming to Apple has started manufacturing phones in India. So if you see the manufacturing boost is absolutely fabulous. Another third thing I will actually contribute to is a ease of business. Now, today, if I have to start any business, I really don't have to go to any offices. I can just sit at home, I can sit in my office and actually initiate all the requests, all permissions, and I get it online. The kind of support which we are getting as a businessman, it's fabulous. I mean, yes, there are certain issues, there will always be issues, but then these are getting resolved. These are absolutely getting resolved. If you reach out to the correct people in time, you get a good support. You look at any kind of thing, everything is online. You look at GST kind of an development, it is absolutely fabulous. It is getting connected, the transparency is getting increased, which is actually creating some kind of an issues for the people who had a fraudulent intention. We are absolutely getting completely transparent as far as the business is concerned. Everything is getting connected, so people need to think twice when they are actually thinking about any kind of an fraudulent intentions. GST is linked, Aadhaar is linked, IT is linked, income tax is linked, everything is linked. So if you really look at it, now there is no scope for any kind of an fraud. There will always be some genuine guys who will be one step ahead of the government. But yes, everybody is taking a lot of efforts to ensure that there is a transparency, there is a security, and there is a ease of business. And it is a continuous effort. It is not a one time effort. It is a completely way of going ahead. Every time there is some new things are coming up, new processes are built up, infrastructure is getting built up. I think that has really contributed well. I mean, today when I'm speaking to a lot of banks or speaking to a lot of industries, people are comfortable and they are actually getting the support. They are looking at it, and you name the support, and it is available. I mean, I can share with you. I mean, we had some kind of an unique problem in Canada. So I requested my client to actually get in touch with the embassy. He went out to Indian embassy, who got in touch with the Canadian embassy, and some help was actually given to the client. That kind of an atmosphere will certainly increase the comfort and the confidence of all the exporters, all the clients. And that's something new, that's something really really new. I mean, I had not heard about it 20 years back, to be honest. So we are in the business for last almost 2 3 decades, but then this kind of an support we are getting from all the sources, whether it is a government or private sectors, we are getting the support. There is a complete ease of the business, which is actually getting improving day by day. I think that will certainly contribute to push the export and push the trade in overall fashion.
Thanks, Kishore. Yes, India badal raha hai, and we can witness it as a common person also. And thanks for sharing this experience, because we can say anything, we can read anything on media, but when we experience something personally, we really think that okay, things are really changing for good. So thanks for bringing in that positivity. Ravi, what is your view on this? How are we growing in terms of exports despite all the challenges?
So few things have worked for India. Like obviously Kishore mentioned, there is a huge focus on infrastructure. Yesterday itself, the government of roadways and ministry, announced that they achieved a Guinness Book of World Record by completing one patch of road, a huge long distance patch in few days time, and completing that. So that's the focus of the government, that putting in the first biggest roadblock for attracting any sort of an investment, which is the infrastructure. So there are, a lot of work going on putting up the infrastructure in place, which will attract the investors. And obviously, from that point of view, the geopolitics also has played out its part. India stand to benefit from the perspective that there are always the strategy which it has seen in past couple of years, with the supply chain getting constrained completely in the past 2 years due to pandemic, followed by the geopolitical situation and the residual impact of pandemic in China also. So thereby making the global buyers reach out to the next best destination. I would say the best destination, not the next best destination now, which is India. So that's where the investors, obviously the demand is there, as I earlier mentioned, across the world. So if demand is there, the supply constraints needs to be eased out somewhere or the other. It fills in the gap has to be fulfilled through a solution oriented approach. And what's that is that the global buyers are reaching out to the other destinations to set up the procurement process. And that's what we are seeing in India also, that there are tremendous amount of interest coming in, as much as that most of the sellers across industries, across sectors, are showing that their order book is possibly fulfilled for next 6 to 9 months, whereas in earlier scenarios it used to be possibly a 3 months cycle. Now their order book is filled by 6 to 9 months. So that's what is playing out. So it's not just about the internal dynamics at play, that is the infrastructure and other ease of doing business being put in place. It is also external factors which are aiding to the development. Obviously it has to be a matching or a fitment process which has to be there. It's a process what you call right person at right place or right situation, and that's what is being played out in the current scenario where India stands to benefit. But obviously there is a long way to go till if we are to achieve whatever goals have been set up for the current financial year and next financial years. I do expect and have a strong belief that India can do it, and India's entrepreneurs can do it, which has been demonstrated in past during the pandemic, especially the PPE and the other kits and all those things, where India was a net importer, had a shortfall, tremendous shortfall in the beginning of the pandemic, and within 6 months they turned out to be a net exporter. So that's the change in dynamics. Where there's a will, there's a way is a perfect definition for India's entrepreneurs. Thanks.
Thanks, Ravi. Rightly said. Yes, we can do it, and it has been exemplified already. Government also takes a lot of actions like VAT reduction, export bans, and lot many other things that government is doing besides whatever you both mentioned. So yes, make in India, being at the right place at the right time, demand, and lot of other push from government has also helped us. Here's time to take a question, and this question is from Vinod. Vinod is asking, hi Kishore, where is the time for India to make effort to increase its share in global markets? By increasing rates, isn't India making industries difficult to access funds? Is the industry going to get support from government to grow, especially exports, to increase its share in trade globally? So Vinod is worried on impact of rates in terms of availability of finances. What is your view on this, Kishore?
The question is very good, and that is the key pain point of many corporates to getting the funds. See, the problem is twofold. One, the deserving people, deserving corporates are not getting the funds, and then banks are also flush with the funds. So there is enough funds in the banking industry, but then it is not being given to the right kind of end partners. So that challenge will always be there. But this is not a peculiar challenge only for this time. This is a continuous process. As I said earlier, whenever we are actually trying to see it only from the short-term perspective, yes, there will be challenge. Banks also need to take some one step ahead, take some higher risk, look at the overall scenario and lend. See, now this is the problem when exporters are actually looking at funding at a right time, at a right place. If you look at the banking industry, banks are not keen to take any kind of an exposure without any kind of an collateral security. I was speaking to one SME guy just 2 weeks back, and they were actually looking at some kind of an working capital finance. Uh, the rate was really very high. I don't want to take the name of the bank, and which was actually backed by the entire collateral. So, for example, just without giving any kind of a name or any figures, if the company was looking for the overall working capital of $100, they were actually asking for the security, collateral security of something like $200, and the rate was also absolutely high. I think this is where clients and the exporters will look at alternative to the banking industry, and that is how all these fintech companies are coming into it. This is how the factoring companies are coming into business. people need to be aware about the different products. I have been in the factoring industry for almost more than 2 decades. Ravi has been always with me from those period also, and unfortunately, the product has not been popular among the corporates. People have not thought about this product in a proper fashion. Unfortunately, the industry has not sold this product or not accept this the product the way it is. If you really look at in US and Europe market, this factoring is absolutely a common product. It is a BAU product. Unfortunately, that is not what it is. People need to actually come out of their comfort zone, try to look at the different product. We have really looked at, we have not done much on factoring. We have not done much on the silent payment guarantee. We have not actually talking about the co-acceptance. There are multiple product, multiple way of arranging financing. We never think about reimbursement structures across the globe. So there are ways. The problem is that banks need to take one step ahead, structure the requirement, and offer the product. Now that is what is lacking.
Thanks, Kishore, for sharing your views on that. Ravi, what are your views on this?
No, so thanks. Indeed, of course, as I said, the impact in the short term is going to be there, and but there are larger things at play, which is the inflationary trends, which RBI needs to address. If inflationary trends are not addressed at the right time, then it will start impacting from a demand point of view, which is what we do not want to be impacted, right? So there are things which are getting affected, but I don't see the investment cycle getting affected. The corporates or the borrower is up for, yes, the rating rates are going to increase in the short term, but I think there is enough opportunity to play out on the volumes part of it. The business is sufficiently there. As the numbers speak out, even from an exports point of view, last year financially it was $400 billion on the $400 billion plus on the merchandise, $250 billion plus on service side. It is expected to be growing up to possibly $800 billion total for this financial year. So I don't see a challenge. Of course, there will be short-term pain, but from an overall industry cycle point of view, I think the industry can absorb that sort of a cost in the short-term duration. So it will work it out. The other aspect, which Kishore also rightly pointed out, that from a factoring and other aspects point of view, definitely people are realizing that importance of factoring and the products like that. And this is a time when people do understand and appreciate. Of course, we have not been able to capitalize in past 30 years since factoring was started in 1990s or so. However, there is still, and I would not blame only the customers. I would blame all the stakeholders, including the factoring companies and possibly banks and whoever was offering factoring product, because it's rightly said the bookish knowledge didn't play out in the right manner, and I still see those emerging trends in some some stakeholders where they see it as an opportunity, but without appropriate due diligence, appropriate care. People think that okay, factoring is a very rosy product, attractive product in the trade finance realm. Unlike so, it is a very technical product and very detail oriented. You need to be absolutely meticulous in bridging those gaps, bridging those risk elements, which unfortunately many people do not see, and start thinking that okay, they can do factoring product, but that's where the challenges lies. And once in few years time they realize that possibly that's not their bread cup of tea, that's when they realize that by that time they have spoiled the name of the product. The product is not to be blamed. It is the players who have to be blamed for misusing or underusing the product and not using the product in the right manner. But definitely, I'm sure that there is a right opportunity for the product to capitalize in the right time now.
No, I mean,
Thank you.
I would agree to Ravi. I mean, yes, we need to actually take one step ahead and let everybody understand this product, all participants. So I mean, let me give you an example. I mean, just few months back, there was one of the exporter who was actually trying to export something on to some party in Canada, and he exported the goods, sent the documents to the bank, through the nationalized bank. The documents were delivered, and he also got the message that the goods have been picked up. So on the due date, when we tried to get in touch with the buyer, He could not get any response. So his bank actually reached out to another bank and requested for the information. And that another bank to whom the documents were sent simply refused that we have not received the document. Now this was a big issue. So they went back to the courier company. These are all international courier companies, and they gave them the proof that the documents have been delivered at this particular address. So that was the address of the bank. But it was bank has clearly refused that we have not received the document, and the signature which is there on the acknowledgement of the document is not any of the officials of the bank. So how do we do it? So we wanted to actually go ahead and try to see how it was structured, because somebody has picked up the document, representing himself as a bank employee, and it was also confirmed from the shipping company that goods have been picked up by submitting the original document. So and then the client refused to accept it. So there was this kind of a fraud. He was dealing with this particular client for the first time, and when we requested the client that what you let us know what are the due diligence you have done this on these importers, so the answer was completely negative. He had not done any due diligence. He got a query from the internet, and he was quite comfortable. So he sent the documents on an acceptance basis. Unfortunately, we could not actually, take bank to the court. Unfortunately, so we requested the client that why don't you actually initiate the legal actions against the client, and we can actually file a criminal case, in a criminal case in the country and initiate that process. But clients basically refused to do that. But this was the loss. Ultimately, whatever financing he had got from his bank record that financing, because it is kind of an with recourse kind of an financing. It is a normal post shipment financing. So if you really look at this kind of an incidence, you will see there is not much due diligence has been done, neither by the bank and neither by the exporter. Somebody has taken the advantage of this situation, and although we cannot really control all the frauds, but yes, this could have been avoided. Now, when we actually look at him, when we look at the factoring as a product, there are somebody who is actually taking the risk on the buyer's country. The import factor will always do his due diligence because he's putting his neck at the stake. In case of default, he's going to pay you 100% of the invoice value. So he will do the proper due diligence, he will do the proper follow, and that can get covered. So these are the simple things. As you rightly said, it may take some time, but yes, in the long run, it actually helps. It really helps to the exporters. So, I mean, there are multiple ways of financing. I can tell you multiple examples, but then we all need to be absolutely cautious when we are actually dealing in the international market.
Thanks, Kishore, and thanks, Ravi. Vinod, thanks for joining and asking your question. So the thoughts from our experts are that despite whatever rate hikes are there, liquidity will not be an issue. The only thing is people need to go beyond the book and they need to look at different products. Another key point is be vigilant and go for the products which are giving you all sort of support, not only giving you money in the beginning and then running away, you don't even know what's happening, but go for a good organization, a good service provider, financial, who supports you till the last mile. So these are the output from whatever discussion we had on Vinod's question. There's another question here. Here is a question from Edeklo. He wants to know why Africa is not served by India factoring. This is over to you, Ravi.
Yeah, thanks, Ediklo, for this question and raising this appropriately. Also, it is incorrect to say that we are not serving Africa. We are present in Africa. We have some of the customers, the buyers of the customers who are based out of Africa. I would not say whole of Africa, definitely, but there are certain parts of Africa where we are transacting. Of course, we cannot offer direct factoring in Africa because our license is to operate in India under the supervision, under the regulations as per the India's Act, India's regulator, which is the Reserve Bank of India. So that's why we can service the clients, that is the participants, that is the sellers in India. We are doing some trade supporting the exporters out of India to the African continent. yes, there is a tremendous shortage of what we can do. I can say that possibly we are doing roughly 0. Maybe 0.02% of the trade to the African continent. There is a lot more which could be done. Unfortunate that we do not have lot many counterparties, that is the banks or factors based out of Africa who can support on the other side underwriting the buyer's risk. If that is provided, and we are in regular discussions with the stakeholders through FCI and other stakeholders, Afro Exim Bank and various others, to reach out to the right counterparty and have that business going, because there is a huge amount of trade which we want to serve also, and provide that sort of a service to the customers supplying to the African continent. But we are doing it in a very small manner. We look forward to doing it, taking it up further also, depending on now the credit insurance which we have with us right now, backed by that, and possibly the counterparties in the African continents. Unfortunately, the banks and factors are relatively shy of underwriting the buyer's risk in the entire African continent as yet. But we are trying to develop that market. There is a specific section or a specific chapter which is opened up by FCI to support the African continent growth. We are in regular liaison with them, and hopefully we will be able to up that numbers soon, possibly within 2022-23 itself. Thank you so much.
Thanks, Ravi. Kishore, would you like to share your thoughts on this from Indian market perspective?
Yeah, absolutely. I mean, if you really look at it from the Africa perspective, the Africa Export-Import Bank, Exim Bank, is very aggressive in that. So any kind of for Africa from the India perspective, whatever the exports are there from India, Indian Exim Bank has set up multiple lines on different countries. So these are backed by the government of India. Similarly, for all other imports and export from Africa, Africa Export-Import Banks has also set up some kind of an policies and schemes where the exporters and import can get benefit out of that. So I mean, yes, there is some kind of an support from India also, not only from India factoring perspective, but from India exim perspective also. They have set up multiple lines from multiple countries, so that also can be looked at.
Thanks, Kishore, and thanks, Ravi. Thanks, Declo, for joining and asking your question. India factoring is already in Africa, and we are coming there in big way, as mentioned by Ravi. Thank you. Kishore, a while ago, you mentioned something very interesting, that this sort of things used to not happen 20, 25 years ago. And for our viewers, they may look very young, but between them, we have 45, 50 years of experience in the studio today. So, Kishore, what has changed? What changes have you seen in last so many years that you have been in the trade finance field? Please share your thoughts on that.
Yeah, I mean, the word has come closer. It's not that now today I can actually pick up the phone and speak to anybody and try to resolve anything. That was not so easy 20 years back. Technology has helped us really a lot. When we actually do the trade transactions, I can share with you 20 years back. 2020 was when I was actually in Stancy and other banks. That was the advantage with these MNC banks, because they used to have the offices across the globe, and we used to structure any kind of a transaction by speaking to them. But that was not the area of the expertise or reach for the private sector bank or nationalized bank, because they always used to depend on their counterpart, maybe some representative branch, or maybe again MNC banks. But then MNC banks always had an upper hand in doing any kind of a global transaction. So it was, predominantly all the structural trade or all the big ticket deals or any kind of a structuring which involves more than 2 or 3 countries, we were done by the MNC banks. Now that has changed. Now, if you really look at the technology, you can reach out to all the people. There is I would say, information explosion. There are too much information available in the market, and you can actually go to anybody, try to structure anything. You don't really depend on one bank. There are multiple fintech companies. See, if you see, I mean, the trade has completely changed from a paperback, I mean, which is still predominantly trade is a paperback kind of an trade activity. But if you really look at it, Today, I can sitting in the office, I can do various things. You talk about the bill of lading. There are people who are offering e-bill of lading. Today, if I have to see where is my ship, I can go to simply few website. For example, Money Traffic, free of cost. I can actually see where this particular vessel is there, what is the speed, in which direction, which port it is going. I mean, it was not something possible, few years back. So that technology has helped us. You go to, a website like Panjiva and all those things. They will give you entire information. You go in Dun and Bradstreet. You go to any, credit information companies. They will give the entire details of these, counterparties. So this has really helped us. You know. Though technology has taken its shares in creating a convenience of doing the business, it has its problem also. So I mean, when we actually see there is a surge of the blockchain technologies, and everybody is talking about the blockchain. Every corporate, every IT companies, every bank is talking about the blockchain. But let me be very honest. I mean, blockchain doesn't apply to everything. I mean, you need to be very specific what technology you want and what exactly you want to do. We have just seen just 2 days back there was a news of the V trade getting into insolvency. Today morning there is a news of HSBC backed another venture, Serai. They have decided not to go ahead. There are multiple issues. So what is important is how you are going to use the technology. Whether you are going to use the technology for the benefit of the masses, if it is actually creating any kind of a value, or is it actually increasing the efficiency, reducing the cost. So these are the key factors which we need to answer, and then only we have to look at a overall picture from the technology part. But yes, yeah, I mean, it has really improved a lot. Today, sitting at home, I can do anything. I can do KYC. I can onboard the client. I can sign the agreement, legal agreement, sitting at home. And this actually, you will say, this has happened more in India perspective also after this post-COVID area, because you have been pushed to it. You have been pushed to it. Uh, and you do entire transaction today. When I'm talking about a new NBFC, where I'm actually advising this company, we are doing everything online. Onboarding of the client, KYC, legal documentation, transaction processing, recovery, everything is online. Forget domestic. You go to a company called Shifty Pro, they will do the KYC for you in the international market. You say what you need and everything is there. We are actually, it has become a one country rather than one global earth. It is just a one family, Vasudhaiva Kutumbakam. So that's kind of an situation we are in. We are so all those country barriers are no more there. So you reach out, you try to take the advantage in a positive fashion, and you get the support. You get the support. So that is what technology has actually helped us.
Thanks, Kishore. And I could see that smile when you went back the memory lane. Thank you for sharing your experiences. So, what you are saying is from having the dominance of MNC banks to everyone doing it today, from having that rigidity to flexibility and convenience of your home, you can do it anywhere. Ease of doing business, all are these things that have changed in 2 decades or more than that. Ravi, what's your view? Even you are smiling, so I'm sure you are remembering something.
No, Kishore summed it up in the one word, that is Vasudeva Kutumba, so that's where the world is a country today, rightly summed by Kishore. It is, no better term can define it. It's such a shrinkage of world that world is today's local marketplace. You can order anything, you can pay by PayPal or any other mechanism, and few days time the goods are with you. So likewise on the trade also, I would say the biggest issue between the international trade was in the earlier scenarios, possibly few decades back, was a trust, right? The buyer and the seller didn't trust each other, and that's why we had this emergence of the Incoterms, where you work out whatever on the basis of your trust factors, you agree on the Incoterms which is suitable to you. And when both wanted to secure that position for themselves, that seller was underconfident whether the money will come against the good. Importer was underconfident about the quality aspects and possibly delivery also. And that's why the trend emerged of the LCs, right? Which was a bank. Everybody trusted the bank, and they thought that okay, the bank and bank trust is there, and one bank can issue, other bank can fund against that LC. That was the basic underlying concept of trade which emerged. Now that is getting replaced because of the emergence of technology. The world is, a closely knit space. There is a growing confidence. You can pick up a phone and reach the buyer, not even pick up the phone, possibly WhatsApp or any other mechanism is there. Information is readily available on any buyer, any seller. You Google and you get hundreds and thousands and loads of information, good, bad, ugly, everything is available. So on that basis, you are better able to, get a supply, get a financing, get a contract done. More so, the world, the trend which is emerged is on the trade on the basis of open account transactions, and that's where the emergence of trust factor, or basically securing that sort of a transaction, is growing more and more prominent. Possibly 10 years later, if we are able to have a similar chat show, we will be talking that there is no LC business at that point of time. Okay, that's a very high number I'm talking about, but the possibility is always there, so the world is moving towards open account transactions, and what better to serve that product for open account transactions is the factoring, which is the product which can serve much better, and that's where we are able to serve the customers better. Other things which has improved across that scenario, rightly mentioned again by Kishore, is the technology. Technology has emerged, and technology has been able to support that sort of a growth. Digital today is everything, the way forward, and I am happy to share that India is taking a lead on the technological front, on the digital landscape, the UPIs and whatnot. On the global front, if you were to check the data, India is amongst the topmost contender on doing digital transactions across the length and breadth. Even the remotest place, if you go today, you will be able to make a payment through any of the UPI mechanisms. So that's the biggest factor which is contributing to the growth, and I see that trend emerging even further in next few years' time. Thanks.
Thanks, Ravi. So, technology and change is the name of the game, is what how I would sum it up. Besides Vasudev Kutambakam, which has proved that there are no boundaries, there are no limitations, only possibilities. Let's take up a next question, which is again to Kishore. Vinod seems to be heavily invested in Africa, so this is again coming from. It's he's asking that in his knowledge, India has very big stake in African continent. This is mainly in the area of infrastructure projects. Have the African markets developed for factorable products like we see in Europe, USA, or other Asian countries? Over to you, Kishore.
Yeah, I mean, good question again, Vinod. Let me share some experience. I was in actually Kenya some 2 years back, 2.5 years back. It was just before the COVID area. So I met few bankers over there, and people were really very positive. Now let me not generalize the statement about it. That I will not talk about the entire Africa, all the countries, but multiple countries in African region has come out very well. They are actually, we can actually look at it as a growing economy. And when we actually look at from the banking perspective, many banks are actually set up their shops, and they are very positive about it. The standard groups and Standard Chartered Bank and many other banks are actually quite positive about what they are actually trying to do in Africa. So there is a good scope for the banking industry. But yes, it will take some time. I mean, if you really look at it from the Europe and US perspective, the factoring product or any other banking product is going to take some time. It's a long way to go. It need to develop the trust. It need to develop the comfort. It need to develop the history of the trade, and it was a difficult market. Let's accept that. Maybe a few years back, the Africa was a difficult market, and it is coming out of it now. I can assure you, when I met the bankers in Kenya, the people were really positive about the entire trade development. They are actually thinking ahead of the time. They are talking about the technology. They are also looking at a complete transparency within the African region, which will create a comfort level for all these, Asian, European, and American banks. So the situation is changing. It will take some time, but I am highly optimistic about it's coming up very well upon the curve.
Thanks, Kishore. Ravi, your views?
No, I agree with that. And as I addressed the earlier question by the, Adelco on the African trade part of it. So I think there is a lot of trade which is happening and which is already happening, and banks are supporting. But definitely we see to it that the emergence of factoring product to support that sort of a trade is also there. There is a huge opportunity. Of course, it needs to be balanced with the both sides, with the regulators across the geographies, the counterparties across the geographies supporting each other towards that end. So I see that huge possibilities, and I'm sure the next few years we'll see that change in the dynamics playing it out. Thanks.
Thanks, Ravi. Thanks, Vinod, for bringing this up. And as you would have heard, our experts are talking very highly of Africa, and that's where possibilities lie, as Ravi mentioned. Let's
No, I
pick up.
can I can actually share, Gauri, one of the word used by one European banks. They are actually cautiously optimistic about the Africa. Now, whatever it means.
Yeah, you seem to be a wordsmith, Kishore. You are summing things up in a few words, and it is really very much appealing. Thank you so much for sharing that. This question is from Deepesh. He's asking, in today's world, there are banks which onboard customers within 24 hours. However, onboarding onboarding time under factoring is quite long. How you foresee a reduction in customer onboarding time for a faster scaling up of business cycle? As we know, need for speed is very critical, and that's what Dipesh is asking. So we'll start with Ravi this time.
Yeah, thanks, Dipesh. Thanks for asking this question. Rightly so. There are various measures undertaken by the regulators, not only in India, across the world, to fasten up that process. And towards that, as Kishore also pointed out, that onboarding is now going on to digital format. So the onboarding per se, perfectly from a KYC and an agreement point of view, is becoming very quick. Today's scenario, the video call which we are having, or this live stream which we are having, the same mechanisms are working out on the KYC front also. There are mechanisms to use geo stamping to prove the authenticity of the KYC being done. So all those are getting implemented. The time element which you are referring to possibly is not onboarding of the client per se. To start transacting is what I believe you are reflecting to, and that takes time definitely, because here there is an interplay between the buyer and the seller. So there are some responsibilities on the buyers and the sellers before you start the factoring process. So that's where the dependence lies on that. However, so there, that until and unless you fulfill those responsibilities, the factoring doesn't come into the play, and that's where the little more time which you're reflecting, highlighting towards. The balance is something which is required. Definitely, time is essential. Today, time is money, and that's where the balance is required. However, I believe that while time is of essence, speed also thrills, but speed kills also. So in a hurry, you may skip certain elements which can come to haunt you later on, and that's where we need to be balanced. Onboarding is essential, time critical, yes, but doing your due diligence, not cutting corners, is equally important from that perspective. And that's where we believe that having a balanced approach is equally important, and that's where we believe are working out on that play. There are players, there are operators, fintech companies who are able to solve that problem and possibly issue certain approvals or onboarding in a 15 hours time or 14 hours time also. But then we have seen that that sort of a behavior can come to haunt you later on if you cut corners, I would say. So that's where there are fintech opportunities, there are digital capabilities which definitely help and enable you to onboard, but without cutting corners is of essence. No amount of digital capabilities and possibilities which are there will help you cut those essential elements which are required to be in place before you onboard the customer. So yes, time is element, but in a balanced manner. Thanks so much.
Thanks, Ravi. Over to you, Kishore.
Yeah, I'm actually a very old and conservative banker, so I will appreciate. I mean, Ravi put it in a very nicely and polite fashion, but let me be very upfront. I mean, it is going to take some time. Let's accept it. I mean, let's not say that certain things can be done. I was speaking to one bank, and that bank has implemented policy that the loan should be approved within 1 hour's time. And I asked them, how do you do it? So, Kishore, I mean, you have the answer. How do we do it? We have no option to do it. How do we analyze a client? How do we look at their balance sheet? So, what we do? We approve the loan, yes, no doubt about it. So, we give in principle sanction within 1 hour. And the in principle sanction will always mention that, okay, you need to give this document, we will do this analysis, we need to get this report and all those things. So, final sanction will depend on this thing. So it defeats the entire purpose. See, ultimately, if somebody is going to take the risk, if somebody is going to put his money at the stake, they will have to do the due diligence. And that is good not only for the bank or the NBFC or fintech company, it is good for the corporates also. They also should understand, especially in the international business, when you are actually getting into factoring, forfeiting kind of a transaction, it is very important to do the due diligence of the all counterparties. So in banks, you actually do the due diligence only on your client, and it is a post facto. You just analyze the balance sheet and decide. Factoring does not work like that. Factoring works on, even if the balance sheet is not that strong, we also look at some kind of a performance risk. And in factoring, we give more importance to the performance risk. So we do the sales ledger analysis. So even if the balance sheet is not strong enough, where bank may not give him any money on that balance sheet, as a factoring company we can actually try and give him some facility basis his buyers, basis his receivables, basis his past track record. If the past track record, his performance is good, I'll be more than happy to actually extend him any kind of an facility. And that happens. There are multiple examples in the industry, not only in India but across the global factoring companies. So when we are looking at it, yes, it is going to take some time. We will have to do the analysis of the sales ledger. We have to see the performance track record of the exporter. We have to see the performance and financial track record of the borrower. And once we get into it, this is a long term. So this is the initial phase. So even if it takes some time in the initial phase, this is a continuous facility. I know many clients, and I think Ravi can vouch for it. When we get into the factoring, though initial period maybe it will take something like month or two, but the clients are there and enjoying this facility for 10 years together, 5 years together, without any hitch. So yes, it takes time because we need to do the proper due diligence. There are some other parties like credit insurance. There are factoring companies who are also involved. They are also doing their due diligence. So once everything is gets sorted out, we offer the facility. But then it is for once efforts will actually pay you long run, and it goes on for maybe 3 years, 5 years, 10 years. Ravi, you can actually share. I mean, what is your average clientele they are dealing with you?
No, so rightly pointed out, Kishore, all those are important aspects which needs to be taken care of in factoring sort of a facility, and not like to like comparison, and the real efficacy of loans which are disbursed or approved within 24 hours. If you were to check, it plays out nice from the marketing point of view that we are able to approve the loans on a 24 hours, or possibly pre-approved loans or something, which is a new trend now. But it's a call between risk and exposure point of view. What we are talking about, the pre-approved loans, is possibly a personal loans because they have analyzed your trend on the salaries or possibly other things which you are having a salary account. So those are banks which are able to work out the maths and able to give you that this much money is coming in on a monthly basis. On that basis, the trend is there that you have an AI or an ML setup which is assessing those data and able to give you. As against that, factoring or any other large borrowing, a large facility which is being set up requires that sort of an assessment. Until and unless you do an assessment, today India is not able to provide that sort of a credit information rightly available, on tap. Even though the bureaus are there, the rating agencies are there, the entire length and breadth of information is still not there. Yes, it is there. The GST is the biggest contributor towards that in digitalizing and availability of the data. Yes, we are making a good move towards that, but definitely we are not there yet to completely depend on the data. There's an importance of meeting the customer also, which cannot be done away with. Visiting the factories, which is important also. Visiting the customer, meeting face to face is equally important. In today's time, there is a huge implications on an AML front as well. There's a huge obligations on the banks and financial institutions on the AML, terrorist financing, other aspects also, and that makes it essential that you do your bit. That's where I meant that, I said that the balance is a key. Yes, convenience is a factor which needs to be addressed, but convenience equally ring fence with the credit aspect. And Kishore rightly mentioned that it's not only an obligation on the banks, it is an obligation on the system. As I call it, it's more of a systemic, which is across the industry, across the globe. You have a responsibility towards maintaining that sort of a due diligence. So that's where I maintain it's a balance which is required, not cutting corners. Thanks so much.
Thanks, Ravi, and thanks, Kishore. Thanks, Deepesh, for joining and asking this question. This will help spread awareness. It's not that the cycle is very, very long. It's like Ravi said that speed thrills, but it kills also. So it's taking care of all the compliances, due diligence, because factoring companies do not want to put their customers in lurch. You just pay money and run away. That's not the case, and that's why it takes some time. So thank you for bringing this up, because it will help spread awareness why it takes a little while when it comes to factoring. Kishore, a quick question to you. You have been sharing your experiences, and as I shared with our audience, that it's more than 25 years of experience that you carry. So, what is it that global trade consultancy services helping customers with, how they can get support from GTCS?
Oh, we are basically a consultancy firm which provide advisory services to mainly banks and of course few corporates on the regulatory perspective, structuring of the deal, cross-border deals where more than 2 or 3 countries are involved. We are mainly into the process related consultancy service. We actually advise banks on the different process related issues. We do the process audit. We are also advising banks on the technology, on the risk. So, I mean, how to create efficiency, how to ensure that the entire process is risk-free. So, I mean, just to give the example, for completing one transaction within the banks, for that one particular transaction, the transaction is related to minimum 8 to 10 different systems. So the touch points are different, so which actually hampers the efficiency. I have seen few banks which actually where one transaction touch point is there are something like 15 different systems. So it creates an issue. So we actually provide a lot of advisory services on the technology side, efficiency side, operational processes side, and of course any kind of structuring deals, FEMA related, RBI related queries, and all those things. Especially, if any banks wants to structure any kind of an LCs, guarantees, so we help them with the drafting of those. If they have any issues on the any kind of a discrepancy, we help them.
Thank you, Kishore. It looks like a bouquet of products, and it's like you name it and we have the service. Thank you so much for sharing that. Ravi, this last question to you. India Factoring was recently recognized as Factoring Provider of the Year globally in a function held last week in London. Could you please share what went well for India Factoring? Because I remember 2016 mid when we did our first export factoring transaction. So it's not that there is a very long history for the company, but here we are being number one as Factoring Provider of the Year. So your thoughts on that?
No, so the international acclaim is definitely a revalidation of the efforts or the dedicated efforts which we ended up putting. So it's not easy, of course, as rightly said, that everything on the paper looks fine. Theoretical knowledge is something, and practical aspect is something else. When you actually work out the nuts and bolts, then you understand the dynamics of the business which comes into play. So definitely, it is a short journey overall scheme of things, but a good journey for us, a well recognized path. We took pains, our own pains, to work up the numbers. It was the most important aspect, as I rightly mentioned and addressed in various questions earlier, was a focused approach and not cutting corners. Now that's the main element. And if you were to speak to the international banks, international factoring companies who are providing that service across the world and are the leaders in today, frankly speaking, yes, we got the award, but I do consider that there are certain more benchmark players and more highly acclaimed players in the international forum who are doing a wonderful services on the factory on the global front as well. So we look up to them also. And if you speak to them, the one or the two key elements which they say is service to the customers and not cutting corners and meeting. The due diligence is the most important aspect, and not cutting corners on that. Technology is an enabler, not a replacement on all those things. So these are the few things which we consistently maintain. Had a focused approach on doing it, even though in the short term meant that we are losing some sort of a business or a high growth potential, but we didn't cut corners on the growth front. We said that we'll maintain the trend, we will maintain the due diligence, we will not cut corners for want of growth. So a balanced approach is something which we undertook, and that's what is reflecting in the award which we have won. So this is just a journey we have begun, as I still call it. It's not the end; it is just the beginning, and I'm sure that there is a lot more, for the team India Factoring to do and achieve the numbers even further on those. Thank you so much.
Thanks, Ravi. Yes, indeed, we take pride in supporting customers, having a balanced approach, having the full due diligence compliances in place, and yet making it possible. And yes, we have a lot more to achieve. Thank you so much. Thank you so much, Kishore and Ravi, for joining today and sharing your thoughts with our viewers. I'm sure it was helpful for them. I definitely learned a lot of things today. Thank you so much for being here.
Thank you. It was
Thanks.
really great to be with you all. Thank you.
Thanks, Kishore. Thanks, Corey.
Thank you. Thank you everyone for joining today, and I'm sure you learned a lot just like me. There were so many new things that we discussed today, and we went back the memory lane as well. If you want to know more about India Factoring, check out www.indiafactoring.in or go to our LinkedIn page or Facebook page or YouTube channel, and you will be able to connect with us. Thank you once again for joining, and we will be back with another chat show, Factoring, one stop solution for your global aspirations. Thank you.